Welcome back to Ferocious Education. This is Ed. Today we're going to be talking once more about Castor Maritime. The aim of this video is to give you an update past their reverse split, as well as their recent operations and what I think about this one, a bit as well with technical analysis and institutional interest. So without further ado, let's jump right into this one. I covered this video before, or this topic before in my last video, but today let's talk about what's new. So one of the main things that are new, well actually two things here. First off, is you start taking a look into the price over book. The price over book is around 0.10 right now. Now, the first thing I seen, and I took a look at that, I was like, well, there's something odd. And here's why I think it's actually wrong. So the price over book is not 0.10. Because even if you go back to my last video, you're going to see that I've shared this screen itself, and it showed the price over book of 0.90. Now, they did a reverse split between now and then. And it looks like that Finviz and all these other websites didn't take into consideration the 1 in 10 reverse split. So that's something to keep in mind on. Now, another thing that I do want to take a look at here, regarding especially as well the price over book, is the amount of dilution that happened. And it's not really showing towards the amount of shares because they really haven't sent out their 10Q yet. And these things are usually updated with 10Q. But here I'm not bashing this company at all. I'm saying that it's actually a smart way to raise money through shares, debt financing, etc. that can actually easily get you those vessels without having to go to the bank and pay hefty percentage interests. Now, I do want to look at another thing as well. This one here mainly pertains towards their $1.1 million net profit for the 3 months ending in March 31st, 2021, and how that compares to the last few months. So the first thing here is the revenue of net $7 million for 3 months ending in March 31st, 2021, as compared to $2.7 million for the 3 months ending March 31st, 2020, which is 159% period to period increase. Now the net income slash loss was $1.1 million for the 3 months ending March 31st, 2021, as compared to the net loss of $0.3 million for the 3 months ending March 31st, 2020, which is a 467% increase. Now, the earning loss per common year is around 2 cents per share for March 31st, 2021, compared to a loss of 68 cents last year. So, the current earnings is around 2 cents a share. The current price point here that you're looking at is around $3.19. Now, even if it was before reverse split, take it divided by 10, so that would be around 31 cents. And we're going to move on from there. You're looking into cash and unrestricted cash, cash and restricted cash is around $64.2 million. That's an increase of around 6 times more than what you've seen here, and $2.6 million for the 3 months ending March 31st, 2021, as compared to $0.9 million for the 3 months ending for March 31st, 2020. And since the beginning of the year, Castor announced the acquisition of 20 vessels across the dry bulk tanker segments, consisting of 1 capsize, 7 Castor 4 Panamax dry bulk carriers, as well as 1 Aframax, 5 Aframax LR2, and 2 MR1 tankers. As of June 2nd, 2021, we've successfully took delivery of 14 vessels and expect 6 remaining acquisitions to conclude by the 4th quarter of this year, subject to customary closing conditions. On a full delivery basis, Castor will own a diversified fleet of 26 vessels with an aggregate capacity of 2.2 million DWT, having more than quadrupled its fleet size since the end of the year of 2020, and the reverse split took effect on May 28, 2021, of 1 to 10. So the management commentary, and this is important, Mr. Petros, the chief executive officer of Castor, commented, "The first 5 months of 2021 was transformational period for our company, as we have been able to raise $252.5 million of equity and $33.3 million of debt, and grow our fleet from 6 vessels at the end of 2020 to 26 vessels on a fully delivered basis, and once we complete all of this will be announced. On a fully delivery basis, our fleet will consist of 18 bulk or dry bulk carriers and 8 tankers, allowing us to benefit from the ongoing demand for bulk carriers transportation or dry bulk carriers transportation services, as evidenced by the recent charter fixture of a number of our dry cargo vessels, as well as the potential of future recovery in the tanker market. So there you go, you get a little bit of commentations over there. You get to see as well that the current year builds, the DWT, the purchase price, and delivery dates of all these other vessels. And you get to see that once they're agreeing to acquire as well, and when they're expected to be here isn't really yet clear, but you get to see the purchase price in dollars. And you might think, well, how are they going to pay for that? Because guess what? They don't have a lot of money. Well, at least basically towards their total current assets. Based on December 31st, 2020, they only had 9 million. Well, there was a massive push on price around February, and they threw so many shares to be diluted, and that raised a lot of money. So keep that in mind when trading this one. That's kind of one of the only drawbacks, but they increased their vessel size massively. And you get to see some more deliveries here, specifics, but I'm not going to go through that since I did last time. And in terms of institutional buyers, it looks like they're a bit mixed. Citadel sold their shares on the 21st of May, but currently there's nothing going on in June. We don't see bullish nor bearish for almost now 3 weeks. So it's kind of dead silence in there. And if you would like to see more contents like this, make sure to drop the like button down below and subscribe and notifications on the bottom right corner. Subscribe, and there's a bell notification button right here. Don't believe me, try it. It will be here. Just click it. It will give you notifications once I share my videos. Now, let's move on towards technical analysis. And so from a technical analysis standpoint of view, and I'm using here TradingView, which is a little bit different than usual because my platform doesn't really show you reverse splits. But take a quick look here in terms of the MACD itself. It was negative for the biggest part after the reverse split, and then is more going on towards the positive. And usually that's a very bullish indicator itself. And you get to see it's kind of climbing backwards. You get to see that happened already before, somewhere around here. Even though this was a positive movement, it was a little bit sloppy and had its ups and downs. Now, in terms of the RSI itself, what you're getting to see is that it's very close to around the 20-ish. So it's a little bit closer to oversold than overbought in that sense. Now, another thing I do want to kind of show you here is a bit of the reverse splits effect on the stock. So you get to see here in terms of the 3 months, it almost get you that bullish flag that kind of goes straight down just closer towards the reverse split. Now, if we were to go ahead and try to take a look into something, let's say, as support and resistance, significant value levels, you get to see the current support level, or its current significant level, would be somewhere around 329 as a resistance. Support is around 305. Then you go a little bit downwards at 242, below down 199, and then downwards to 172. Current significant points of resistance is 361, 416, 497, 554, then going 727, 835, 919, you're going up to 1035, etc. Comes to the question to Ed, what do you think about this one's? For me, vessels and SOS, all these companies, not sorry, SOS, I forgot the name of the company, but these vessels companies in general, like CTRM and others, like CHIP, that was the name, SHIP, usually the trend there comes in as more of a continuous downtrend. Now, this company here has done something completely different than its competition. You get to see its competition did have a similar chart, but it's holding a lot better. Back in February, it skyrocketed and it's holding better. So I do expect CTRM to kind of pull back up a little and stabilize. Now, their earnings is okay, but here's the thing, right? You're taking a look at a company that has around $286 million as market cap, which might not actually be even accurate because it did a lot of dilution as well and added a lot of shares. But assuming that is the case, you're looking around $7 million net revenue and around $1 million net profit. So it's quite interesting to see that valuation. But again, compared to its peers, you get to see that it has room to actually catch up back up, because if you were to look into this chart and CTRM, you find CTRM just continuously dropping. Meanwhile, CHIP and other of the competitions are holding up just well. And so from my perspective, I think that in the next 5 years, they either go bankrupt or actually make it a lot better. And I think that is a fair assumption to do because the vessels market is a very competitive and appreciative market, in my opinion. What do you think about the sticker? Make sure to mention down in the comments below. Share, subscribe, and like, and have a wonderful day.
Now, if you made it this far into the video, I do recommend that you go ahead and join our Discord server. There's a lot of amazing folks in here. We do a lot of discussions here into the trading floor throughout the day. A lot of people are in there, and we do ask questions. You can ask me any question you would like on there. We do post research and DDs, and we hold weekly chat sessions. And we also do have a lounge in there. So make sure to actually join that and join the fun there. Have a wonderful day and a good one.